We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrick. Joining me today is Paul from the Sirius Report. Paul was originally a physicist. He was awarded a PhD in biomolecular physics, after which he spent some time working in academia. He then went on to work in the financial services sector and worked in some major banks until the financial crisis of 2008, when he left the banking sector to work in the precious metals sector. Paul, thanks for joining me today.
Oh, it's a real pleasure. And thank you also, Tom.
I'm looking forward to this conversation. And, listening to your podcast, it's very clear that you're very aware and focused on the commodities and energy issues that we're facing as a world. So maybe we can start with going over at a high level some of the, let's say, short-sighted policy changes that are driving up costs, food insecurity, and even lack of energy. Are there any particular examples on your mind at this moment that we can start with here?
Yeah, I think an obvious, really good example to use is the Ukraine war and the sanctions that were imposed on Russia. That's one immediate example. And the short-sighted thinking of Western nations. And in very clear terms, there was this idea from the Western perspective that we can sanction Russia into oblivion very quickly. The ruble will collapse, the economy will collapse, the financial system will collapse. We'll get rid of Putin pretty quickly. And then we can, restore some sort of normalized relations with a non-Putin president. Well, of course, none of that's come to pass. So much so, of course, that in the process of putting these sanctions in place and their desire to have oil embargoes and gas embargoes, and the bureaucrats and the technocrats in Brussels just came out with these ridiculously short-sighted statements that we can just do this and it's very easy. We'll find alternative supplies. And actually not realizing that trying to find alternative supplies is far easier said than done. And, the United States went all over the world trying to bag OPEC or OPEC Plus, which of course is fundamentally run by Saudi and Russia, that they could get them to increase production. And Saudis, along with the Russians, said, no, we're not increasing production. They also went, in terms of LNG, to the likes of Qatar. And the Germans, a few weeks ago, were sounding out the world, going, look, we've got an alternative to Russian LNG. We're going to strike this long-term deal with Qatar. And by all accounts today, they haven't reached an agreement, and that's collapsed. And the truth is, Europe has about 155 billion cubic meters of Russian gas a year. And what Qatar's offering is just a fraction of that. And the US said to Europe, well, we can meet some of the Russian demand for LNG. And then it turned out the US couldn't. And what they were proposing to do is tell Asia, which obviously the US supplies LNG to, can we just take a bit of your LNG supplies and give it to Europe? But again, it's not even 5% of Europe's annual needs. So they had a bit of a wake-up call with regards to the fact that that's not a reality. But they stupidly, of course, sanctioned Nordstream 2, which would have doubled the amount of LNG that Germany was in receipt of. So we all know in very simple terms that energy is the lifeblood of a nation. So if you have insufficient energy supplies, then, of course, and also this, we'll talk about the whole green, not revolution, the exact opposite in a minute, but by cutting off their own nose to spite their face, they've got energy problems. They've got the risk of energy shortages. Their gas storage facilities are empty, and they shouldn't be at this time of the year. And of course, this was even before we had the Ukraine war. The issue was that Europe particularly had this insane idea of this green revolution. So we want to move away from fossil fuels. Okay, and so we don't want to use coal. They didn't want to use nuclear power because they don't seem to understand that modern day nuclear power plants are extremely safe. It's not like Chernobyl in the 1980s. And in the process, they had all these ambitious plans for wind farms, solar farms, and they just didn't deliver the energy. So, the idea was, well, it was the wrong kind of sun, or the wind wasn't strong enough. And not understanding that and we're not here to talk about the green revolution. That's a whole sort of separate subject, which we could talk for an hour about.
Mm-hmm. At least an hour.
At least an hour. But in simple terms, you cannot meet the energy demands. And they've still got people screaming in Europe because of their ideological hatred of Russia that, well, we just need to increase green production, not realizing the costs and the implication of trying to get the resources to manufacture wind turbines. What? And they go on about sort of environmental issues. Well, they only have a very short lifespan, and you throw them in a landfill site. And where are you going to source the materials to make wind farms and solar panels? I mean, 90% of global solar panels are manufactured in China, and China has issues with the West because of Taiwan, and that's a whole separate subject, and Xinjiang, etc. And of course, the US trade war with China. So Europe put itself in this position. Now it's sort of still got the European Commission, who, as I say, this ideological hatred of Russia is, well, we just have to get off Russian energy at all costs. And you have Germany, which is the major industrial nation in Europe, their industry screaming at the government, and the European Commission going, you can't do this. If you cut off energy, you're going to destroy our manufacturing base, or what's left of it. And so there's consequences where instead of just accepting the reality that you can't, divest from Russian energy that quickly, and in fact, logically, even the European Commission, or certain elements, the more sane elements within the Commission, where, well, it's going to take us 5 years. It might take 10 years. And in fact, it might never be a reality. And therefore, there was also the whole idea when Russia came out and said, because, effectively, the Russian central bank was sanctioned, they cut off most of the major Russian banks from SWIFT. And they telegraphed to Russia, look, you can't trust payment in euros, or you can't trust payment in dollars or any dollar or euro denominated debt. And they signaled not just to Russia, but to the wider world. But that's a whole separate point. And Russia then said, okay, well, in order for us to trust you, we want payment in rubles. And obviously the process is you create an account at Gazprom Bank and they pay the euros, then they're converted into rubles by the Moscow exchange. And therefore that satisfies the transaction. And Europe was screaming, we're not doing this. And now there's over 20 European energy companies who've acquiesced very quietly and go, yeah, well, okay, we'll have to pay in rubles. And of course, that created stability, or some degree of stability in the ruble, which at one point was 130 against the dollar. It's now about 65. It's probably ironically a bit too strong for Russia, because Russia has a free floating ruble against the dollar. And there's a lot of criticism even in Russia about doing that. But if they hadn't done that in 2014, when the original Maidan happened and sanctions were in place and oil was significantly cheaper, Russia would have collapsed. So it was a very wise decision to do that at the time, contrary to a lot of expectations. And inside Russia, we believe that the Russian central banks is just a conduit to the IMF. I refute that completely.
Well, Paul, the IMF has recently really recognized the strength of the ruble. So do you see it, continuing to strengthen as well?
Well, there's people in the West who, when the ruble was 130 against the dollar, the ruble's collapsing. And then when it started to strengthen, people went, well, it's an irrelevant market. Who sets the exchange rate between the dollar and the ruble? So, they were trying to have it both ways and they couldn't. Mm-hmm. The issue with regards to the ruble is that obviously it depends to the extent on which, and seemingly, Europe's now having to toe the line and pay in rubles. But more importantly, it also telegraphed to the rest of the global south, which is 88% of the world's population. It's where all the vertical growth sector is, unlike the West. It kind of created a quasi petro-ruble. I have to be careful saying that because people will hear that. But in a sense, it has. And also it telegraphs in the future, and Russia said this, that we might sell other commodities in rubles. And Russia has an enormous commodity base, hard commodities, soft commodities. They've now admitted finally that there's consideration being given to backing the ruble with gold. And I said this in 2016 and people went, this is insane. It will never happen. But it's always going to happen. It's just a matter of timing. So the question is, if there's more and more engagement with the ruble, for example, India is buying Russian oil in non-dollar terms. And the question is, are they paying in rupees or rubles, or is it a combination? We have Certainly China trading in non-dollar terms with Russia. For the first time that happened was when they signed the so-called Holy Grail energy deal for the Power of Siberia 1, which was to be conducted in non-dollar terms. Okay, it didn't come online because it had to be built, but by 2019, it was trading in non-dollar terms and in a combination of rubles and yuan. And there's no doubt that China will support Russia. It has done by buying more energy and trading, obviously, increasingly in non-dollar terms going back in 2014 and onwards. So they'll support it. The global south will trade in non-dollar terms and in rubles. I mean, an obvious example is the Eurasian Economic Union, which obviously for anyone who doesn't know, and there's a lot of people in the West who don't, the member states of that is obviously Russia, Armenia, Belarus, Kazakhstan, and Kyrgyzstan. And they're increasingly trading in rubles as well. So there's more and more global support for the ruble. Now, the obvious question is, does the ruble become too strong at some point? And there is a risk of that. But at the moment, I think the Russians are pretty happy with where it is. It's created financial stability. Their economy has handled the issue of sanctions. I mean, just in very simple terms, when there's still a lot of Western companies who don't want to leave Russia, but the ones who have, the Russians have gone, fine, well, we'll just take over the factories. We'll keep the people on, employ them. We'll rebatch whatever you were producing. And then we'll sell the goods to anywhere in the world that wants them. And, if you don't want things in the West, you don't want our energy, that's your downfall, because if Europe cuts off its energy in terms of oil and gas from Russia, it will collapse within a week or two. It'd be completely unsustainable.
Well, this is a point that I really wanted to hit on, Paul, is, when we look at this conflict, let's take Germany as an example. By sanctioning Russia, this cuts off over half the gas supply to Germany if they actually stopped delivering the gas. So, what effects would that have on the country?
Well, just in very simple terms, let's take one step back before we answer that question, because last year, Russia said to the Germans, look, sign a long-term energy deal. And there was kind of all this pressure, don't from the Americans, because the Americans want to sell LNG, which is far more expensive. Just because, simply because you have to ship it thousands of miles across the world alone. And on that basis, they could have signed long-term energy deals instead of spot price deals, where they could have had gas at a fifth or a sixth or a tenth of the cost they're paying now. So if you cut off energy to Germany, for example, then what you're going to do is that what the cost of energy for Germany is going, who knows, it could go to $3,000 per 1,000 cubic meters or something ridiculous. Well, the implications of that, if you have a manufacturing base alone, what's the cost of all the goods you're producing? It becomes completely prohibitive. Your exports are going to be economically unviable as far as your export markets are. People are not going to pay those prices. Domestically, what would it do to the economy of people? We're already seeing it in the UK, where people's energy bills have gone up 4, 5, 6-fold. People can't afford to pay this. You create energy insecurity. And, if you produce, manufacture and produce food in your country, well, those costs rise. And therefore, you start to have the worst possible nightmare, is an energy food crisis and insecurity. And I spoke prior to even the pandemic that the West was heading for this crisis in terms of its energy needs and food production. And here we are today, we're actually risking stabbing ourselves in the foot, the head, the torso, and everywhere else, because, let's just look at the implications. If we need soft commodities, and nations now are very fearful because of food insecurity globally. So India's going, we're not exporting wheat. And they're the second biggest exporter of wheat. And people don't understand, China's the biggest by about 30 million tons a year, greater than India. Mm-hmm. So that has ramifications. So you start to have this kind of negative feedback loop whereby you have hiking energy costs, for example, in Europe, which means if food producers, Netherlands produces a lot of food, but we were there recently. My wife's family lives there. And we looked at the cost of food, and the inflation that you could see was astronomical. And these are the sort of knock-on effects that if energy costs a lot more and you don't have Nordstream 2, even though it hadn't come online, but it could have been switched on immediately, and you start to risk losing energy supplies from Russia. And they're not even thinking, well, what happens if Russia decided themselves unilaterally to cut supplies off? And they thought that the Russia wanting rubles for gas was a bluff call. And when Russia wasn't getting payments, they switched people off and went, sorry, you're not having the gas now. Oh, so you're actually serious about this? And the risk is if you cut off energy, they're not going to be able to source the energy. So if you have rationing, and that's the best case scenario in that situation, then you're going to have rolling blackouts. And then the provision is in European nations that the priority has to be, the domestic supply. So industry then starts to go through this lottery, who's going to get cut off? And, well, if you start cutting huge sectors of the industry off, then you're going to have massive unemployment. But the problem is they're getting to the point now where producer price inflation across Europe is anywhere between 20, 30, 40%. Well, you're going to have to pass on those costs, and you're going to pass the cost domestically inside the Eurozone. But if you have an export market, you're going to start making your exports just economically unviable. So it's just an enormous, almost quadruple whammy that you're destroying your own economy in the process that you actually thought in Europe that they destroy Russia's economy. And look at Russia now, it's stabilized. And they didn't understand since 2014 that Russia had already been sanctioned. And it, changed its whole import market. It started to have import substitution. It created internal markets for a whole bunch of things. So it became more sustainable domestically. It has the big advantage. It produces energy domestically very cheaply. It's not going to be selling energy to itself at these inflated prices. It doesn't need to. It just has its domestic market. So it can control the price of energy inflation, unlike the West, which could have, like Germany bought or Europe bought energy at $280 per thousand cubic meters. Now, what, $1,200, $1,300? I mean, it's just self-inflicted insanity. And because, as I say, the ideological hatred is that, well, we can deal with Russia quickly. And then the message across Europe was, well, you'll have to take a bit of short-term pain because the end goal is we're going to defeat Russia. Well, that's not happening, and it's not going to happen. And again, that's just people inside Europe who are making decisions, which European trade, commerce, and industry screaming at them, going, "This, you can't do this." So they're kind of having to backtrack a little bit and accept paying in rubles, accept that gas embargo is insane, but they're also still sort of half going, well, we don't depend that much on Russian oil, or some nations. So let's have an embargo. And then you've got nations like Hungary who are going, I'm sorry, this is totally unacceptable. And of course, if you don't have unanimous approval of embargoes in the European Union, then it doesn't happen. Mm-hmm. So, but it's just this myopic short-sightedness and a lack of understanding that at the end of the day, they should have understood. It was very clear to me that you're not going to destroy Russia economically by sanctioning. But the West, and that's a separate subject, the damage it is doing to its self-inflicted damage to its economies is one thing. But more importantly, the global South are looking at the West and going, we can't trust you anymore. And that in the global South, includes the Middle East and Africa. And we've seen the attitude of the Saudis with respect to the United States, who were once a very, strong ally in inverted commas since the kind of petrodollar days. The Saudis have now turned their back on the United States, going, we don't trust you anymore because if we do something you don't like, you may cut us off. You may cut our central bank off. You may cut off our access to our dollars or our euros or our pounds
or the foreign reserves.
Yes, our foreign reserves, because whatever everyone thinks, that was the most disastrous thing that the United States and Europe could the so-called West could possibly have done. And there's an interesting point to this with regards to why Russia had, and it's debatable how much of the forex reserves are in the West. There's people said $300 billion equivalent. Some people say 250. But anyway, it was a substantial amount. Now there's an argument that would have said, on that basis, that was a pretty ridiculous thing to do. They've known for years. Back in 2014, the Obama administration threatened cutting Russia off from SWIFT. But here's the point. The head of the Russian central bank, who's Nabulina, that's Elvira, what happens in the aftermath? Putin says to her, because she was offered to resign, and he said, no, I want you to stay on. Now, I've heard, here's a bit of conspiracy for you, that the Russians actually intentionally left reserves in the West, knowing that the United States would seize them. But the blowback for the United States and the West through doing this in a global context is astronomical. It has turned the global South completely against the West. They don't want to trade in dollar terms or euros. They are very reluctant to trade with the West. They would rather develop their internal markets and have far more cooperation, even though there's significant cooperation in Asia with China, for example, or in Asia with Russia, or that's, again, a whole separate subject because there's a huge sort of multipolar world developments over the last 5-6 years. And there's a clear correlation to the fact that the damage the US has done, and the US is a whole separate subject again in terms of what's been going on there. But it was a really, really stupid decision to attack Russia's central bank, steal, whether it's $250 billion equivalent, and sanction their banks, because it told the rest of the world who don't have a very stable relationship with the West and the United States particularly, well, you could be on the list next. And therefore, consequently, it's accelerated the development of the multipolar world, which, as I said, is the global South. And look at the issue with the attitude to Russia, and they're not sanctioning Russia. They absolutely are trying to do the opposite. They're looking at ways to circumvent dollar-based system. They're trying to get out the dollar themselves. They're trying to get out of euro-denominated assets, etc. equally, because they now realize, well, if we don't acquiesce to the US's demands, maybe we're next. And whilst Russia has an enormous commodity base that gives it the opportunity to be able to weather the storm like no other nation probably on the planet, they're not in the same position. They're dependent on these resources. They're dependent on other nations. They couldn't withstand being sanctioned the way Russia has. But there's a kind of irony for me that if, and it's not reality, but if, for argument's sake, the United States was to have those sanctions imposed on like Russia has, or Europe, they would have collapsed in the blink of an eye. They would have been completely unsustainable. And again, that's their mindset. Well, if this happened to us, we'd collapse, so Russia will collapse. But again, they don't understand Russia. They don't understand the nation, the people, the culture, the Russian economy, Russia's resource base, Russia's strength of relationships with the global South, which the West doesn't seem to think exists. Talk to the West, they think the only nations that really exist is Europe, Japan, Australia, South Korea, perhaps Singapore, and New Zealand, perhaps. As far as they're concerned, the rest of the world doesn't exist and is irrelevant because they haven't been paying attention to the developments in the rest of the world, where they have this enormous growth potential, where we in the West have reached the end of the line. Where's the growth potential in Western nations? It's very hard to see because we've kind of, for me, reached a point in financial terms and economic terms that we're at the end of the line. And this is why the West is economically so weak and its financial system is broken and cannot be fixed. But when we look at Southeast Asia, for example, and Africa, and there's the opportunity to develop the Middle East and all these huge poles in a multipolar world which can be developed and have the capability to be developed, and in a way that they're actually producing something of value, and they can utilize Russian commodities to do that. There's a very compelling case why the world is moving away from unipolarity and actually has the strength and conviction to resist being threatened by the United States, despite, of course, endless color revolutions and regime change attempts. And that's a whole separate subject. But they feel more emboldened because they feel that they've got Russia and China to support them, and they're growing. Their economies are growing and getting stronger. They're low-cost bases, and they can produce goods. They can produce things of value. Whereas in the West, what are we in reality producing? We just recycle bits of debt, and and in a service-based economy that produces nothing of value.
Well, I think that's a great point. And when we think about, let's say, the dependence on some of these other countries, you recently highlighted the extreme imbalance of critical minerals and metals that are produced by China. So can we go over maybe a couple of those stats on how much of this critical commodity base comes out of just China alone, never mind Russia as well?
Well, everyone always thinks, just a small stat, with regards to Russia. Russia obviously produces enormous amounts of energy, oil and gas. Mm-hmm. And then there's things like palladium, and then just things like neon, and the list goes on and on. And then in terms of soft commodities, wheat, etc. But, China's, I've just highlighted the example earlier. If you talked about wheat exploration or, exporters, everyone goes, oh, that'll be Russia, or that will be Ukraine. Turns out China's the biggest wheat exporter in the world. It's kind of 135 million tons per annum. Mm-hmm. And then Russia's about 90 million. People don't understand China produces enormous amounts of the world's rare earth metals in terms of silicon production and used in all the applications. They're one of the world's leading producers of that, and increasing, they're producing more of their own oil and gas. Okay, it doesn't anywhere near satisfy their needs, but, we look at Xinjiang, which is very controversial from a Western perspective, but in Xinjiang, they've got an enormous resource base. They're constantly finding new oil and gas deposits. They produce enormous amounts of cotton there and other resources that exist that they've yet to exploit. And it's that, and rare earth metals is a very obvious one as well, which the United States is heavily dependent on China for that, which the United States fails to grasp, that if China just stopped sending rare earth metals, that's going to have an enormous impact just alone on US military capability, along with a whole bunch of other sectors in the process.
Because a lot of these rare earths are very integral to this, making permanent magnets, for example, that go into these high efficiency electric motors.
Yes.
As you said, the military guidance systems, for example, there's so many of these minerals that we're completely at this point dependent on China for, right?
Oh yeah, you're talking anywhere between 100% dependency or 90%. Mm-hmm. And people inside like Washington just go, well, source them from somewhere else. They don't exist. Oh, well, we've got rare earth metal potential from exploration in our own country. Well, good luck in doing that. How much do you actually have inside the United States? And what's the cost of exploration? And how quickly can you turn an exploration potential into production? And it can take years. You're talking maybe 3-5 years. You might be able to accelerate it. The other question is, who's going to finance all this? And, when you look at things like, let's just look at some examples. You've got cerium as a rare earth metal that's used in catalytic converters. In LCD plasma screens, you use it in oil refining. You've got rechargeable batteries, smartphones. Then you've got dysprosium, that's things like lasers, missile guidance, as you said, nuclear reactor control rods, permanent magnets, wind turbines. And the list goes on. We could talk, I won't bore people with the entire list of rare earth metals, but the US dependency on this is enormous. And it can't find alternative supplies. The other problem the United States finds, and it's a very simple statement of fact, is it's highly dependent on Chinese imports. Now, we can question the quality of Chinese goods, but it gets Chinese goods very cheap. Okay, they insanely put tariffs on them, which created price inflation unnecessary in the US market. But if you want to replace that and all that Chinese produce and say, well, we're bringing industry home, in very simple terms, as you said before we came on air, you're going to have to pay Chinese wages. Because if you pay US wages, and that's assuming you can bring this industry, and the industry doesn't want to come home because its profit margins are far higher having an industrial base in China or Southeast Asia. But if you bring it home, who's going to finance the trillions of dollars needed in terms of infrastructure rebuilding, in terms of bringing these companies home, in terms of their capex costs, in terms of bringing, you're going to build a factory here. Where are you going to build it? And you're still going to have to access the Chinese market for things like rare earth metals. And what's the cost? What's China going to do? They could then say, well, actually, we're going to charge you 100% more. And in the end, so that they potentially can create price inflation for anyone. And this is the point that the West's missing. Just a small digression is everyone goes, well, China's going to have massive inflationary problems due to energy. Well, not if Russia's selling energy dirt cheap to China or to India at massive discounts to what the West's paying. But the point with regards to the US market is that even if they can achieve all this, I don't know how they're going to raise the finance. Well, they're going to go to China and say, China, can you finance our massive infrastructure rebuild, which they would have done a few years ago, but certainly wouldn't do it now because of the trade war, because of Hong Kong, because of Xinjiang, because of Taiwan. So the US is, people go, well, the US can just print trillions of dollars. Well, do they not understand the consequences of what that will do? It should be self-explanatory, just even in inflationary terms. So the US is caught between a rock and a hard place because if it wants to pay Chinese wages, then what does that do to its current economy and financial system? It blows it all up. In totality, it's not sustainable. And the other problem is if they don't do that, then you're just going to produce a lot of stuff in the United States. No one in the world will buy it because China can continue producing it far cheaper. Mm-hmm. And the other problem you have is if it is significantly more expensive, then are the US people prepared to pay 3, 4, 5 times for all the stuff that's produced now? They simply can't afford it. Never mind all the other inflationary problems we have currently and all the problems in Western economies and the Western financial system. It's simply not sustainable, and it's not feasible that this can happen. And there's people who seem to think that they can defy the laws of reality and make this happen. But for the US to do this, it would have to be an incremental process. And it's very hard. What you do, say to one industrial sector, come home, but how is that going to work out for them? How do they actually produce goods in the United States? I mean, where are you going to stick factories? You stick them in the middle of nowhere somewhere. And, well, where's the rail links? Where's the bridges? Where's the roads? Where's the transportation links? And I think the idea the US can become this self-serving internal, economy is just living in a fantasy world currently. We're so far away from that being a reality. And here's the price if the US could do this, and maybe eventually it will do. The price it will have to pay is the dollar will become an irrelevant currency globally. It will certainly not be a world reserve currency. And the US is desperate to preserve that, even though it's failing, because it gives it this so-called exorbitant privilege to bully the world, even though increasingly the world doesn't want to be bullied, particularly the global south. But it will, it's going to have to make enormous sacrifices to make this happen. And you can't just magically turn everything, the proverbial oil tank around on a dime and make all this happen, because at the end of the day, if the US wants a self-sufficient market, well, it needs to be self-sufficient in every aspect. And is that feasible at the moment? No, for all the reasons we've just highlighted. The irony is if they'd gone in 2016, when initially Trump rolled out the red carpet for Xi in Florida and said to the Chinese, we want to rebuild America, will you finance it? The Chinese would have done it. And, but they didn't. What did? They did the exact opposite, antagonized China, started a ridiculous trade war, which the United States has lost, because just look at the trade deficit between the United States and China. It's self-explanatory. So they would have been far better to have had a cooperative attitude. And, maybe they would have had to, eat a bit of humble pie, and maybe some Chinese investment in the United States would have had to have happened. And maybe there is consequences for that. But at the end of the day, the United States has got to learn that if it wants to actually achieve some sensible goals domestically, and it's debatable if it wants to do that, then it's going to have to compromise its win-win cooperation in a multipolar world, not we want, our cake and eat it, and we at any consequence, and we don't care what the implications are to any other nation globally. Those days are over. And that's the challenge the US faces, because it has to find a way of reindustrializing in the future, but it also then has to build strong relationships with nations it currently sees as serious adversaries, namely China and Russia.
Mm-hmm. So, we've spent a lot of time talking about, let's say, the cost of goods going up and why that is. So do you have let's say, a sense of the effectiveness of the Fed trying to fight inflation by commodities and goods becoming more scarce by adjusting the interest rate? Is that going to be an effective tool to be able to fight inflation?
Well, it's a great question. I mean, I've said for years that it doesn't matter where the Fed can raise interest rates or not raise interest rates. In the end, the destination will be the same. It'll just be destruction. Because here's the problem. Okay, they think they can raise interest rates, but even I think the Bank of England have come out and admitted, we don't have control over inflation. These are their effects we cannot influence. They know supply chain problems. Okay, that's a whole separate subject about supply chain problems or a lack of commodities, which is partly at least causing inflationary problems. It's not entirely the problem. But the issue is that, for me, raising interest rates, I mean, we're talking about people in the West have heard it from the ECB going, well, if we're raising interest rates to cool, take the heat out of the economy. There's no heat in Western economies. In the United States in Q1 of 2022, and even though GDP is completely rigged, was down 1.4%. That's not an overheating economy. That's an economy, there's technical terms about being in recession, but that's an economy in decline. Inflation hasn't been caused by an overheating economy, and I don't think they understand the reality of what's causing inflationary pressure. They don't know. There's very few people who seem to acknowledge that if you print enormous amounts of money and it ends up in Main Street, you're going to have inflation. And I think why people failed to understand that was because we had all this QE and zero interest rate policy from 2008-9. And they went, but it didn't cause inflation. Well, it did cause inflation. It's just it created inflationary bubbles in terms of bond markets, equities, housing market, etc. All the kind of financialization of economies. But of course, eventually it was going to make its way into Main Street. And what really was a catalyst was the pandemic, when, the West, the United States was a classic example. The pandemic kicked in, economies shut down, they panicked and went bail everything out. And when we mean everything, just throw money at everything to prevent a total collapse. And of course, then the money made its way into Main Street. And the idea there's no correlation between all that money ending up in Main Street and also with respect to causing inflation. I'm sorry, it's a statement of fact. When if you have too much money in circulation, you're going to get inflation. Of course, there's an element that says, well, when, people are also confused by the fact they go, well, if we raise interest rates, it's going to stifle the economy. It's going to take the heat out of the economy. It's going to reduce prices, and that will curb inflation. Well, there's a thing called stagflation, which means you don't have any economic growth, but you have inflation. I mean, we had it in the 70s. People seem to have forgotten that ever happened. And we're in a position, and I've said for years, you were going to end up with stagflation in Western economies. And that's self-explanatory. So raising interest rates is not going to, as things stand, it might do, but I'd be very surprised to see it curbing inflation. There might be other reasons why inflation falls, but it certainly isn't raising interest rates. And the problem with raising interest rates when your entire economy depends on debt and credit is you have already highly indebted individuals, companies, corporations. And in future, if they want to raise more debt, because that's how Western economies function, they're going to have to pay more for that debt. You're going to have the risk that as you raise interest rates, it's going to depress the markets, which arguably, of course, it will continue to do so, because it does historically, because companies are perceived as weakening fundamentals, even though their actual fundamentals bear no relation to reality. And this is this big asset price inflation in stock prices compared to the EBITDA, their fundamentals. It just doesn't marry up. Mm-hmm. So the issue is, by raising interest rates, you're going to, whatever's left of your economy, you're going to start impacting the bottom line of corporations and all businesses. So you're going to create the risk of more economic downturn, more unemployment, more and certainly more financial uncertainty in terms of raising interest rates. What's the implications for derivatives markets? We talk interest rate swaps. There's hundreds of billions of dollars of interest rate swap. What's the implication of raising interest rates on those markets? They're tied into treasuries. What's the implication of raising interest rates on bond markets? Because, if I'm sat there, am I going to buy a 10-year treasury if they can't keep telling me in 2 months they're going to raise interest rates again? You're not going to buy treasuries. And there's absolutely clear evidence of massive sovereign nations dumping treasuries, particularly in the back of the Ukraine war and the sanctions. So there are all these factors playing out that in reality won't do anything to curb inflation. Because the bottom line is, if what's going to resolve the problem of steep energy prices, until you curb energy prices, which is the lifeblood of a nation, and we all depend on energy. Every aspect of our lives is dependent on energy. Well, you're not going to curb costs in terms of energy. So if energy costs remain high, then everything remains high. So your economy could crater completely, but you're still going to have inflation. So, and raising interest rates is just going to cause more economic instability, financial instability that's already very acute anyway. Mm-hmm. And therefore, it's not an answer. But if you had a genuinely strong economy and it was overheating, and we had some sort of normalized interest rates and a normalized financial system, which we've had none of that, it's a complete illusion since 2008, then you might sensibly say, well, this is feasible. But given the current sort of economic financial climate and the reality, this is simply not feasible. It's not possible. And therefore, raising interest rates, I mean, we've seen it in the UK. They've sort of now raised interest rates gradually. Has it done anything to price inflation? No. And Bank of England's coming out going, we're expecting, almost apocalyptic rise in food costs. And it's going to impact energy markets. And therefore, on that basis, they're telegraphing, well, we don't have any control over this. So we can't control inflation. So are they effectively admitting that raising interest rates is irrelevant? Well, is the UK going to be that radically different to Europe or the United States? Okay, there's different. It's not the same, but there's broad similarities. And therefore, I don't see how that's going to curb price inflation. Mm. Because the issue is as well as all this money that's sloshing around since the pandemic in Main Street, there's also the issue of what happens when all this money that's tied up inside the financial system since 2008, what happens when people start dumping bonds, dumping equities? Where's all that money going to go? Is it just people just going to park it in a bank account? Or are they going to want to find somewhere else to put it? So where are they going to put it? Are they going to increasingly look at hard assets? Maybe the realization at some point is that they'll buy gold and silver. Maybe they'll look, where are they going to put the money? And that's more money that was effectively in this kind of mushroom or inside this bubble that never made it into Main Street, that's going to seep into Main Street. And that was, for me, setting aside the pandemic ever happening and policy decisions, that eventually all this money that this printed money that was inside the financial system and bonds and equities, et cetera, was eventually going to blow up and seep out and have to find a home somewhere. And I think there's that. And I think increasingly that money is going to start seeping into Main Street as well. And they'll want to find a home for it. And there's an argument that if you see cratering equities, cratering bond markets, huge instability, where are people going to invest in? And this comes back to this point, and everyone knows I'm a big advocate of gold and silver. I'm not telling people to invest in it or do anything. I don't make price predictions, but for me, there's an argument at some point is more and more, and it's not just central banks investing in gold, for example, but high net worth individuals are going to start looking at economic financial reality and go, well, I have to start putting money in gold and silver because it's the only way of protecting my wealth, because everywhere else it's carnage. And I don't see how the economic financial position is going to improve anytime soon for all the fundamental reasons. Like I say, once you have QE, zero interest rate policy, as I wrote to governments and said, don't do it for more than a few months. You can do it for a few months. It's a short while. Let's throw a bunch of money at something and get an economy back on track. Then we have to normalize rates. But once you don't do that, you create all these asset bubbles. And GDP is a complete illusion. I mean, the United States books the entire cost of an iPhone on its in terms of GDP, which is a myth. And that's one small example why US GDP is a fraction of what it is. And in reality, its debt obligations and its debt is way in excess of 30 trillion. It's got unfunded liabilities, at least 200 trillion. We know for a fact there's probably at least 100 to 200 trillion that you can't be accounted for on the US PLC, for want of a better description, balance sheet. So is it really 400 or 500 trillion? In reality, probably. And when you've got all these companies that are massively overvalued in terms of their stock price, well, at some point, reality has to bite. And you have to normalize real GDP, which is exaggerated, versus these asset prices. So we've never seen this in history where that gap has to be bridged, that normalization has to occur. And it's the same, with bond markets. The bond markets will blow up. And what are the consequences? Well, we're already seeing with the Swiss National Bank, who reported significant losses in Q1. Why? Because of their exposure to equities and bond markets. And it's the same principle. At what point does all the liabilities on the Fed balance sheet become even greater liabilities because of this effect in terms of bond markets? And what about mortgage-backed securities? I mean, the question is, who's even going to buy them off them? They're toxic. And people say, well, central banks can't go bust. Well, yes, arguably, of course, that's true. But it's the implication that the rest of the world and the global south looking at all this going, well, we need to move on. We don't want to be part of your financial system anymore because it's completely broken. The Chinese know it, the Russians know it, and most of the global south know it. Okay, they've been inextricably linked to it, but they like to find a way of getting out of it and trying to circumvent the obvious problems that we're facing. And, these are the kind of realities, and this is not rocket science, it's not PhD economics, this is just common sense, that when you create an artificial environment, create bubbles, then at some point the bubble becomes unsustainable. It's like the housing market in Western nations is totally unsustainable. It's not reality. At some point, the price has to adjust accordingly. Otherwise, you're going to end up with no one in the property market. The other problem is if you have the risk of massive defaults, you're going to have this enormous amounts of property where people are foreclosed on, again, as an example. And you're going to have this enormous supply. And where's the demand going to be? The demand's going to come at a price that's significantly south of where it is now. And so there has to be the whole Western economies and financial system has to have this recalibration to reality. And okay, there's people who also go, well, we can inflate all this debt away. Well, how does the United States inflate debt away when it's running massive budget deficits? It has enormous trade deficit. Well, if you keep inflating prices, then you're just going to inflate the budget deficit accordingly. You're not going to miraculously the only way you can inflate debt away is if you actually have a robust economy where you have a budget surplus. Then you're in a position to start to go, but if you're running massive deficits, it's not possible to inflate debt away. In fact, all you're going to do is make the problem infinitely worse, because there comes a point, and we saw it with the pandemic, where they had to bail everything out, including the likes of you and I, where it was appropriate. Well, if they create the economy so badly, and we end up in that situation again, what are they going to do? You have a choice. They can let people starve. They can let them become energy insecure, food insecure. Well, what's the ramifications in the United States if you do that? This societal unrest is going to be exponential. So what's the alternative? Everything collapses. They're just going to have to go back into, well, we can't raise interest rates. In fact, we're going to have to lower interest rates. In fact, we're just going to have to bail everyone out and just keep printing endless amounts of money. And then there's no way back for the economy. There's no way back for the financial system. So then you're into the realms of just print until everything completely implodes and everything becomes completely unsustainable. And if anyone thinks that's not a reality, that's precisely what happened in Weimar Germany. Mm-hmm. And they ended up where people are, taking wheelbarrows with money, and they were becoming worthless by the time they got home. So they were burning money because it was a better way of burning the money to keep warm, because they couldn't afford to heat their homes. Now, okay, people think that's an extreme example, but the West is heading that way. We continue raise interest rates and blow everything up and not curb inflation anyway, or do nothing to interest rates and just allow inflation to keep spiking. And the consequences is total wreckage. One way or the other, the journey will be different, but the destination's the same. And as far as I can see, that's the fate the West faces. And I think certainly now, finally, there are people inside central banks. There's people inside economists. They won't talk about it publicly. But also there's people I know from working in the financial system. There's people who admit everything's an illusion. We just have to keep the illusion going until it's no longer sustainable. And I think a lot of them, my old colleagues, are now admitting it's unsustainable. It's not. So we just have to keep milking it while we can, because when it's gone, it's going to blow up, and the consequences will be spectacularly bad for everybody, and not just, in terms of the poorest people in nations. They will wipe out the middle class, who are extremely leveraged. It will severely damage even the wealthiest, the so-called 1%, because their money's tied up in big corporations. Well, if big corporations, we've seen with tech stocks, they've been massacred. So their paper wealth tied up in a business is being hugely damaged. You see, hedge funds losing hundreds of billions of dollars. So the idea that they're immune from what's coming is not reality. And I think we need to start dealing with the actual fallout of what's coming, instead of kind of pretending that all this idea about raising interest rates, lowering interest rates, is going to cause deflation. No, it's inflation. No, it's hyperinflation. No, it's stagflation, whatever. The economic reality is the West reached the end of the line in 2008. We just pretended that we hadn't. We didn't implement any policy decisions other than flood the market with cheap credit, into keep the financialization of the economy going, because miraculously there'll be a trickle-down effect. And somehow the money will miraculously enter the rest of the economy, which is nonsense. It's never going to happen. And even recently, they've started to admit that they were wrong about that as well. And in the process, we weren't producing anything. Our manufacturing base was being gutted. And if you live in a service-based economy fueled by credit or fueled by debt, then it's an inevitability eventually. And I used this example before we came on air. If I had £50,000 of debt, and you go, don't worry, I'll give you another 50. And I got 100,000. I couldn't service the 50. I'm not going to service the 100, because unless my business was operationally strong and you gave me debt to grow the business, that's a different matter. But if I'm taking on debt just to prevent the collapse, then all you're going to do is increase your debt burden, and you haven't resolved the underlying problems that your business is unviable. And if it's service-based, and everybody who functions in a service-based economy is because of the underlying economy and financial system of what's happening with interest rates and inflation, simply can't afford to even feed themselves, they're not going to go spend money in a service-based economy. So the service-based economy is created. And it then creates more unemployment. So then people can't feed themselves, never mind, go out and spend money in a service-based economy. So it's just this self-fulfilling prophecy of where if you don't have a viable economy, if you actually just function on financialization, speculation that doesn't actually produce any economic growth, you don't have a sensible industrial manufacturing base, you're not producing stuff, you're not generating wealth, you're just recycling bits of debt and adding more debt. The consequences are self-explanatory, well, at least from my perspective. And I don't see why that's such a complicated viewpoint to grasp and agree with.
Absolutely. It's been said before that the crypto market has been almost a blow-off valve for all of this cheap credit, as you were just mentioning. Do you think that the collapse that we have seen of some parts of the crypto market over the last couple weeks here poses a risk to the rest of the economy and the general equities?
Yeah, I do. I mean, everyone knows, or anyone who knows I'm a big advocate of the future of cryptos, but not what I call first generation cryptos. And that includes Bitcoin. I think recent developments, we've actually seen since Christmas, well over $1 trillion wiped off the market value in inverted commas. And yeah, there was a lot of people sucked in sort of pandemic era going, well, this is a gravy train. I just buy anything and make lots of money. And we've had the recent whole lunar terror thing, which actually highlighted the problem. Okay, it's an algorithmic stablecoin. It's not related to stable coins, but there's still question marks over so-called traditional stable coins and the risk that poses, not just in blowing crypto markets up, but what does it mean in a broader context for the financial system? Who's got exposure to these stable coins? In terms of the financial institutions, what's the systemic problems, contagion problems? And we simply don't know. It's because I don't like regulation, but you have to have some degree of regulation. Without any regulation, it's the Wild West. And we know what the Wild West does, in financial systems. And if you have notionally, $2 trillion, $3 trillion tied up in a market that's totally unregulated, then, that can have serious consequences. I mean, it's not just going to affect the small investor who gets wiped out and is ended up bankrupt, which is happening and has happened. But in a broader sense, there is reasons why the SEC, and I don't like the SEC, for example, but regulators are starting to go, hang on, we need to really understand what's underpinning these markets. What are the risks with stablecoin? Could this have a contagion effect? Do we know the sectors that are exposed to this? And I think there needs to be transparency with regards to that. But, my viewpoint about Bitcoin is very clear. It's been fiat speculation. People have made enormous sums of money, and maybe they could make enormous sums of money in the future. But all this idea that it's going to replace the dollar, it's a payment system. I mean, the narrative keeps being spun in. And now the latest one is it's physics, it's science. It just keeps being respun every time the price sort of stutters, and it's been stuttering around the 30,000 mark, and it might go back up to 50. It could go to 100,000, but for me, it's fiat speculation. And if people want to speculate on that basis, that's their choice. But there are people who are speculating on the basis of being sold a narrative that's not reality. The idea that Bitcoin is going to be an international payment system in the future is just not reality. It will never happen. But can people make enormous sums of money in the future? Potentially, but they could also lose enormous sums of money. And, I don't like all this kind of sales talk with regards to Bitcoin, but does cryptos in the future have a strong influence over financial systems? Absolutely. There's going to be, there is already a digital yuan. There'll be a digital ruble. There'll be other digital currencies used in international trade. And it's self-explanatory why they'll be used. They'll be outside the purview of the dollar system. The transaction costs will be extremely cheap. It's very efficient. In terms of trade, it's very easy to monitor all trade activity based on the ledger system. So for me, it has a future, and I don't dispute that. But do I think first generation cryptos is going to be the future? Do I think Bitcoin, which has existed over a decade, has a long-term future? I've made that very clear. I don't see it. And I think it's just one of those things where it was also very convenient when you start to get the too big to fail banks promoting and pushing people to buy Bitcoin. And then in the same breath, dissing gold and silver and trying to convince people don't buy gold and silver. They're, archaic. No one holds them. They have no future. Meanwhile, central banks all over the world are buying up enormous amounts of physical gold, and China and Russia have enormous physical gold reserves, far in excess of anything the West can comprehend. Iran has enormous reserves as well, and there's a compelling case why Chinese sort of dropped a very flippant comment from someone close to the Beijing government saying, well, gold's going to have a very important part of the financial system in the future. Man, Russia's telegraphed it. But I think there's been a big push clearly to try and dissuade people to buy precious metals, gold and silver. And it was great to say, well, Bitcoin's digital gold. It's the future. Plow into Bitcoin, and people put enormous amounts of money into cryptos, and some people are being burnt and very badly as a result of it. And the risk is that will happen in the future. But it's also been very convenient, because if there hadn't been the big push on the likes of Bitcoin, maybe people would have put a lot more money into precious metals. And there's, I've always been very clear that there comes a point where if people keep talking about price increase, and I've always said, the only time you get true price discovery in gold and silver is the day when effectively you drain the West of physical gold and silver, meaning that there's so much physical bought that, in essence, I think the idea that the paper markets aren't manipulated, I'm sorry, it's just anyone denying that, I think it's just ridiculous. But there comes a point you can't manipulate paper markets when there's a complete shortage of physical silver or gold. And interesting, when there's a sort of support that case, when we had the pandemic, and of course there was a lot of mining shut down and the mints were shutting down, what did we notice? Silver got crept up to $30 an ounce. The reason was because there was a complete lack of physical supply. And therefore, there comes a point where, for all the deficiencies inside the paper markets, when the difference between physical reality and the paper illusion becomes so great that gap has to start to narrow. Otherwise, there's serious risks to the integrity of the paper markets. Well, at some point, that's precisely going to happen. And we've seen cases of serious problems, like in the LME with the nickel. There's a great example. And I'm sure that's just an issue of physical supplies versus paper reality. And I don't dispute that this is what fundamentally will lead to price discovery or true price discovery in gold and silver. And that day will come because, as I've said, at some point, though, particularly in the Western world, and much of, obviously, Western physical gold goes east still. But there comes a point where the demand in the West will be so great that the paper market won't be able to manage the illusionary paper markets versus physical reality, because physical buying's still pretty strong. It's not strong necessarily in institutional terms. And there is some way to go to it before institutional investors actually think there's a problem. And ironically, if gold was $2,500 an ounce tomorrow, the movement out of paper into physical gold would be enormous. Because we started to see that during the pandemic, that when it got over $2,000 an ounce, there was suddenly a lot more institutional investment because they thought, hang on, the paper markets, everything's blowing up. We need to move into physical metal as a safe haven. And the logical argument is price suppression is as much to do with the fact for a lot of high net worth individuals, if gold's at $1,800 an ounce, they're going to go, I'm not interested. What's the problem? Everything's functioning okay. Look at the stock market. Look at it. They think in very simple terms, and they don't see it to be a problem. But if gold was at $2,500 an ounce, they'd be panicking, and they'd be plowing into it, going, "There's a serious problem with fiat currency. There's a serious problem in the financial system. We need to get out of fiat and paper assets, and we need to buy physical assets or hard assets." And not exclusively, but gold and silver are two obvious cases. And I think the day will come when that will happen. But until then, all this kind of shenanigans silver falling for 15 or 14 consecutive days is just farcical. There's no basis for the paper price of silver to fall when there isn't physical dumping to support the paper price being depreciated. And we've seen ridiculous cases in gold and silver where in the blink of an eye we're supposed to believe that billions of dollars of physical gold and silver is being dumped on the market. It's just not reality. So people get frustrated. But for me, I look at it in these, there's a couple of points worth making about gold and silver. First off, if you take insurance on your house on the belief that hopefully it never burns down or something horrendous happens, or flood damage or whatever it might be. At the moment, you can buy an insurance policy knowing the building's half burnt down or even more at very cheap prices. And the other thing is people will fixate too much on the price, the actual price of gold and silver. And I'll use an example of this for me. Gold and silver, it's about purchasing power. It's not the price in dollar terms. I mean, the price could be $500 an ounce of gold, but what could you actually buy with $500 price? That's the point. Okay, there's the flip side. And I've used this example before in very simple terms. Let's just imagine you want to buy a house in the US. Okay, it's cheap out. It's $200,000, and gold's $2,000 an ounce currently. So to buy it, you need to spend. Basically, you would have to sell 100 ounces of gold. But what happens in a situation where, for example, the housing market craters, and suddenly you can buy that house for $150,000 an ounce, or maybe even $100,000, and people say that's not possible. Well, It's entirely possible housing market craters. So, and what happens if gold then is at $5,000 an ounce? And I'm not making price predictions. There's your purchasing power. You can then go and buy that house for 20 ounces of gold. And it's finding the point where we have an equilibrium. So, in fact, the price of gold reflects economic financial reality. And then your purchasing power will be maximized and you can go out and buy real assets in the world with physical gold and silver. Are we at that point? Absolutely not. I mean, it's self-explanatory. We're absolutely not at that point because real money compared to fiat bubbles is so ludicrously skewed the wrong way. There'll come a point eventually when true price discovery in real money, sound money, we find it. And on that basis, then, that an asset, be it a house or land or whatever, will actually truly reflect the price of gold or silver at that point in time. Okay, silver's a bit different because it's an industrial metal. We consume it. And silver's even more ridiculously underpriced than gold from my perspective. There's no basis in reality. I mean, we've got to the point where silver miners, given all the energy costs, etc., simply can't mine an ounce of silver without losing money. This is just not sustainable. But anyway, that's again a separate discussion. But for me, that's in simple terms. So people say, why gold? I don't look at the gold and silver price. I look at the point in time when I want to then sell physical gold or physical silver because it's a good time to buy something in the real world. And at the moment, for me, we're a million miles away from achieving that objective. And as I say, that might not necessarily reflect in the price of gold. I mean, gold could go to $50,000 an ounce tomorrow, but would I sell the gold? No, because if it went to $50,000 tomorrow, everything's completely blown up. So, it might be 50,000 tomorrow, but the day after it could be 100,000. This is the point that don't get fixated on the price, just understand fundamentally what's going on in economies, the financial system, what's happening. And for me, that's the basis. And it's not investment advice. It's just that's the basis of saying, why would I want to hold sound money? You want to hold it because you're taking the insurance policy out to protect for wealth preservation, but also to maximize your purchasing power in the future. And for me to hold anything else at the moment is just doesn't compare to gold and silver. And someone asked me back in 2010 what I thought would happen. And I made the point back then, eventually, the only things left standing will be precious metals. And I still maintain there'll come a point when that will be true. And this was before all the problems we've seen happen since 2010. Okay, for me, it was baked in the cake that QE zero interest rate policy was here to stay. And there was gold was going to eventually, everything would blow up. And that's why I made that point then. But I've said for years, you won't see true price discovery until the West is drained of physical metal. And eventually, the draining doesn't mean there's none entirely in the West. It just means that everybody is just buying as much physical metal. And in the end, the reality becomes that if there's no physical metal available, how does that, because there's a whole argument, okay, what happens to the paper markets? What in reality, what does that mean? Is there actually an ounce of gold for every paper ounce? And in reality, that's not true. But when does it become so disjointed and dysfunctional compared to the physical market? You have to let the price go. There's simply no way of that being sustainable. Now, how close are we to that? It's difficult to say, but when it happens, it will happen extremely quickly. And then the physical demand will be institutions, high net worth people will be desperately trying to get hold of physical metal. And I'm sure we've seen a little taste of it during the pandemic, not because obviously things rapidly changed and people's perspective changed. They thought everything was under control, but there was a short spell where it was very clear there was significant demand, and the economic financial position, given what's coming, is going to be far worse. So the argument is the demand will be infinitely greater. And when the physical demand is so great and it outstrips the paper nonsense, then there's no way that the paper markets can be sustainable at the prices they are, because they don't bear any resemblance to physical reality, well, at least from my perspective.
Yeah, it just really makes you think about, let's say, the lack of counterparty risk that the metals really offer. And at the end of the day, like you say, that is a great reason that the metals are going to be the only thing left standing, right?
Yeah, and that's the point. You make a great point. One of the most poorly understood concepts in the FinTwit world is counterparty risk and what that means. And, if you have counterparty risk, then, what's the ramifications? And it's been so poorly understood that no one conceived the counterparty risk of what was going to happen in '08. And despite people like me screaming in '06 and '07 what was coming, because we understood this, no one believed it. And again, I don't think people are understanding what the counterparty risks are. And you're absolutely right. If you hold physical metal, you don't have a counterparty risk. But if you have a paper ownership, then you have counterparty risk. And it's just common sense. Okay, people have, different ideas, different choices. They want to buy ETFs, and there's some of them think that their ETFs backed by physical metal. Well, are they quite sure about that? Are they absolutely convinced that's reality? But if you physically own it, then you remove the counterparty risk. And let's be honest, if people haven't understood the risks of counterparty risk by now, then they're never going to understand it. But I actually think that's one of the most poorly understood things, even by people who profess to be FinTwit experts, for want of a better description.
Mm-hmm. Well, Paul, I think that's a reasonable place to kind of wrap up the conversation for today. Of course, we could drill into a million different other subjects, and I look forward to hopefully doing that with you in the future here.
Yes, most definitely. I mean, we've gone quite high level and we've talked about a lot of things, but I think it's good just to give people a bit of an understanding. Okay, these are the kind of subjects we can discuss in more detail and drill down in the future and put some flesh on the bones. But I think if you just initially jump in on one subject and hammer it, then it doesn't give a broader context. For me, is as important as understanding the economics and financial system in the West. Mm-hmm. For me, it's been far more important to understand multipolarity, what the multipolar world's doing, what's happening in the world the West denies exists, and what the ramifications for the West were. I mean, I said quite a few years ago, and even sort of last year, was talking about how the United States was clearly steering Russia towards conflict with Ukraine and China with Taiwan. And the reasons were because the West is collapsing. The Western financial system is in disarray. US hegemony is in decline. Its exceptional nation status is in decline also. And there are many factors. And I think sometimes people just focus too much on the West and think, well, the West is the answer. The West will fix things. The West is the future, and ignoring that there is this global South with enormous vertical growth market. And it has the breathing space. It has the capacity to grow, and should not be underestimated and dismissed by the West as being, the iconic image of China with rice fields in the 1970s, or Russia's like it was during the 80s and communism. There are two examples. China and Russia are a million miles away from those nations. They bear no resemblance to a lot of people in the West. They perceive China and Russia to be that. They perceive that Southeast Asia is this very poor, kind of backward nations. It's a complete lie. It's so far from reality again. And we need to start to understand, and it's the West's failure to understand that the world is moving on, that there is the capacity for the rest of the world to choose alternatives and want to embrace those alternatives. And rather than us fighting to try and preserve what the insanity of Western economies, Western financial system, and actually going, we need to embrace a future. And I've made this comment, and it's not a cliche. The United States needs to become a great nation amongst equals, because if it does, the US will benefit enormously. The world will benefit enormously. But the US has no desire to be a great nation amongst equals. It still thinks it has the right to dictate terms to the rest of the world, bully the world, coerce the world, threaten them into line to do what they want to do. And eventually it becomes unsustainable, particularly when you abuse your position as the world reserve currency and you abuse your own financial system. You allow it to do the things it should never have been allowed to do, and speculation is just part of that. And also to actually wreck your internal economies, and not intentionally, as people believe. And as the Chinese said, the United States wasted trillions fighting pointless wars. Okay, there's a military-industrial complex, who want to be, financed in forever and a day. In reality, the US could have spent those trillions domestically and now being the strongest nation economically and financially in the world for the next 50 years. And it could have led the world in every context, not just economically, financially, but in terms of innovation, in terms of technology. And it threw it all away in its desire to control and bully the world. And it needs to learn rapidly that those days have gone. And at the moment, it's still fighting to keep the illusion going. And the reality is playing out in the rest of the world that the West basically denies exists and still regards it as being some inconsequential backwater that simply is incapable of being able to assume any kind of, and it's not dominant, but, in terms of assuming a far more influential position in the world. And the final point worth making is a lot of people in the West who are so frightened of Russia and China because they think, well, if the West collapses and then China and Russia are going to do what we did, and they're going to impose totalitarianism, and they're going to impose dictatorships on us, and they're going to impose hegemony on us. And Chinese and the Russians are looking at people in the West going, what are you talking about? This is nonsense. Do you think we've not learned that we would never do it? And B, do you think we've not learned the lesson of what it did to the United States? So multipolarity, and that's a whole subject for another day, is an indication in very broad terms of, well, we can have win-win cooperation. We can work together. It's mutually beneficial. 1 + 1 can equal 50. It doesn't because some of our parts is infinitely greater. And the West and the United States hasn't worked out. The world trusts China and Russia. They don't trust the West anymore. And the Ukraine war and the sanctions is the final sort of nail in the coffin lid of distrust, which is why even traditional allies like Saudi Arabia have walked away from the US and said, don't want to engage with you anymore. We don't trust you. Because if we do something you don't like, or you insist that we have to implement policies we don't want to, you could sanction us. You might shut off our central bank from SWIFT. You might destroy our nation. And for nations like Saudi Arabia, if Saudi Arabia became unstable like that, that could kick off a whole series of problems in the Middle East. I mean, and who knows what the consequences would be. I mean, we've had problems historically with the whole sort of jihadists, etc., in Iraq and Syria, etc. And that's, again, a whole separate subject. But the point is, if you had political instability in Saudi, and I'm no fan of the House of Saud, but again, it's one of those situations, be careful what you wish for, because if the House of Saud collapses, things get infinitely worse in terms of what fills the gap, the void inside Saudi Arabia. Like, it's a geopolitical argument. But these are the things that are now starting to inside Saudi Arabia, where they're questioning the United States. They're questioning whether they can trust them. They're questioning whether they want to deal with them. And also they're going, well, it's great for business for us. Russia, it's great for business. We want to work with them. And, as whatever people's perception about Syria is, the Saudis looked at it and went, well, Russia did a great job in stabilizing Syria. And they thought, well, okay, and that's a separate subject. Maybe we'll discuss Syria one day or we won't. But, the Middle East is looking at China and Russia very differently from how we do in the West. The same with Africa, the same with Southeast Asia. And you've got the Stan republics and basically, Central America, South America. And it's something I've done in podcasts, as well as looking at the economic, financial implications, is also to look at the development of multipolarity and what's been going on even in the last 12 months in Central South America, and how their engagement and cooperation with China and Russia is hugely significant, and in a far broader context about the alliances that are being built in terms of these poles all over the multipolar world and why they're significant. And the West is oblivious and doesn't have any understanding or seeming even any desire to comprehend that there is an alternative way, and they're going to have to adopt this alternative way, because the way that we've conducted our economic, financial policy and international policy has failed. It's completely failed. It's over. And the sooner we accept it, as hard as that's going to be for the United States particularly, then they can start rebuilding. But until they do, it poses significant risks and threat in a broader context in the world.
Well, Paul, there's a million pieces we can dig into there, and I really appreciate the overview that you gave us on that. Why don't you tell our listeners the best places to find you if they want to read or listen to more of your work?
Well, thank you. Yeah, I mean, obviously, we've got a Twitter account at the Sirius Report. There's a kind of weird irony. It took us 6 years to get to 10,000 followers. And in 10 weeks, we're now over 50,000. I don't know why it happened, but it's just how it just kind of exploded. So we're have quite a presence on there, tweet every day, some economic, financial, geopolitical statement. We're obviously discussing things surrounding the Ukraine war. And we have a website, SiriusReport.com. We used to put a lot of content. I haven't really got time to do articles. We are going to start doing that again, but we obviously have a subscription podcast series, which is extremely cheap, and it's cheap for a reason. It's not cheap because you don't get quality information. It's cheap to make it affordable for everybody. Mm-hmm. We've been approached a couple of times to sell it out to institutions and take it private, and we've refused to do it because we think the price it works out. If you subscribe for a year, it's effectively $1 a week, which is massively cheaper than our peers. And we cover economics, finance, geopolitical things. I mean, and it's very concentrated. There's no waffle. It's very to the point. It's obviously audio. You can download the audio files if you want to, and you can keep them. And we like people to subscribe and support the work we do. We put a lot of effort into it. It's not wishy-washy, trivial conversations. It's trying to link things together. And we've spent years painting, the picture and putting the pieces of the puzzle together. And in the last sort of 6 months, a year, a lot of people who've been subscribed to us for years have gone, okay, now we're understanding because we're seeing the things you've discussed and how they're unfolding. And we've predicted the repo crisis 9 months before it happened and things like that. So we're always sort of cognizant of what's happening. And we don't offer financial advice. I don't do that, but people have said to us, based on what you told us in podcast, we made decisions and it's worked out very well. So thanks. And I'm going, well, I'm glad you told me after the event, didn't tell me you'd done it, because that's not what we're doing. But people can interpret information and make choices on that basis. And that's perfectly fine. That's up to them. But we don't advise people or tell people to invest in anything, because that's not what I'm involved in. Yes, I do support gold and silver, but I don't make price predictions. I don't say, but I just, for me, I laid out very briefly today why I think it's important to be invested in them. And I think they're very sensible, coherent, logical arguments. But yeah, we do the podcast, we do 5 a week equivalent. And I think it's extremely good value. And we've had subscribers for years and they still subscribe. And we keep it cheap because we think that what we are doing is important, that everybody hears it. Okay, I'm not sure, not everybody can afford $1 a week, and I appreciate that. But I think in the context of what other people charge, I think it's extremely good value for money.
Absolutely.
And you can access that from the website. There's a link, obviously, to subscribe. It's called premium content.
Mm-hmm. Excellent, Paul. Thanks so much for your time and your sharing your broad knowledge base with us today.
No, it's much appreciated. Once you get me started on this, I could go on for hours. So you have to, at some point, tell me to stop.
Well, I appreciate it, Paul.
But thank you, and much appreciated also.
Thank you. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.